Hey everyone, and welcome. Have you ever gotten a gift and had that little voice in the back of your head ask, wait, do I have to pay tax on this? Well, you're definitely not alone. Today, we're going to cut through all that confusion and make India's gift tax rules super simple and easy to understand. Let's dive right in. So, just imagine for a second, someone gives you a pretty big gift. Maybe it's a generous check from a friend or some family jewelry passed down to you. The big question pops up almost immediately. What now? Does the tax man get a cut? Let's find out. All right, the first thing you absolutely need to know, and this is really the foundation of all gift tax in India, it all comes down to one single number. Think of it as the golden rule, and it's for sure the most important figure to lock into your memory. And that magic number is 50,000 rupees. Now, according to the Income Tax Act, this is the total limit for all gifts you get from anyone who isn't a relative, all within one financial year. Okay, and this is the part that trips a lot of people up, so listen close. It's not just the amount over 50,000 that gets taxed. No, if the total value of gifts from non-relatives goes over that line, even by a single rupee, the entire amount becomes taxable. So let's say you get 51,000. Well, the whole 51,000 is taxable, not just that extra 1,000. That's a huge difference. And we're not just talking about cash here. This rule applies to pretty much everything. We're talking checks, a piece of land, a whole house, or even things like stocks, jewelry, or that expensive painting your friend gave you. It all gets added up under this same 50,000 rupee umbrella. All right, enough of the serious tax stuff, right? Now for the good news. The law isn't just about taking your money. It actually has some really great exceptions. These are the situations where you can get gifts of literally any value and not have to worry about tax one bit. These are your golden ticket exemptions. The biggest one by far. Any gift from a relative is completely tax-free. Getting married? Awesome. All your wedding gifts, no matter how much they're worth, are exempt from tax. And finally, anything you get through a will, as part of an inheritance, or from certain registered charities is also totally tax-free. And when you look at it side by side like this, it becomes super clear. A gift from a friend, that's where the 50,000 rupee limit comes in. But a gift from a relative, it's always 100% tax-free. There is absolutely no limit on the value. You see how important that difference is? So that obviously brings up a huge question, right? Who exactly does the Income Tax Act consider a relative? Because it's not just your mom and dad. The official list is actually pretty specific and, thankfully, pretty generous. So here it is, the official breakdown. It includes your spouse, of course, your brothers and sisters, and get this, your spouse's brothers and sisters too. It also covers your entire vertical family line, so parents, grandparents, and so on up, and your children, grandchildren, and so on down. Plus, your parents' siblings. Yep, that means aunts and uncles are on the list. And here's the kicker. The spouses of everyone I just mentioned also count as a relative. It's a pretty wide net. Okay, so let's say the worst happens, and you get a gift that is taxable. How do they actually figure out the tax you owe? Well, a lot of people think there's some special gift tax rate, but that's not how it works at all. See, here's the thing you have to remember. There is no separate gift tax in India. It's not its own category. Instead, any taxable gift is just added to your income for the year, under the heading Income from Other Sources. It's actually a pretty straightforward two-step process. First, you take the full taxable gift amount, and you just add it to all your other income for the year, like your salary, for example. Second, you pay tax on that new, bigger total, and the rate you pay is just your normal income tax slab rate. So whatever tax bracket you're in, that's the rate you'll pay on the gift. Let's just do a super quick recap. Gifts from friends, you've got that 50,000 rupee limit per year, and if you cross it, the whole thing is taxable. Gifts from relatives, or any gifts you get on your wedding day, no limit whatsoever, and they are always, always tax-free. Simple as that. Okay, before we finish up, I've got one last really important piece of advice for you. Because even though these rules seem pretty clear, financial stuff can always have some hidden traps. This is why it's always a smart move to get some professional advice, especially for really large gifts. There are other tax rules that could pop up, like something called clubbing of income. This basically means that if you give a gift to, say, your spouse, any money they earn from that gift could actually be taxed as your income. It can get complicated, so it's always better to be safe and get an expert opinion. So there you have it, a simple guide to India's gift tax rules. Now that you know about the 50,000 rupee rule, who counts as a tax-free relative, and all the exemptions, you're in a much better position to handle any gift that comes your way. The only question left is, how will this change the way you think about your next big gift?